Hey guys, welcome back. I hope you had a really great weekend. Alright, so let's go over last week's price action. This is SPY on the 30-minute time frame, and we opened right here on Monday, and we opened right above the gap that we made the week before. The week before we had inflation data, so this was CPI right here and PPI right here, and then we gapped up on Friday after that inflation data. And this week we opened and bounced right there, and we came up and noticed that we are trading above the 35 EMA. So we gapped up on Tuesday, and then when we dropped back down, the 35 EMA caught us up until FOMC. This is FOMC right here. We had quite a bit of volatility, and then we actually closed underneath the 35 EMA on Wednesday. Thursday, we had a huge gap up. We made new all-time highs at 572.88, so right after FOMC, new all-time highs. And then the next day, this is Friday, and then Friday we opened with a gap down, and we gapped down and stayed really close to that 35 EMA. And if we take a little bit of a closer look right here, zoom in, you could see on Friday when we gapped down, we took it all the way to the bottom of the implied move right here. The bottom of the implied move was 566, and then we did drop right to that and then got pulled back in. We dropped back down to it and we got pulled back in. So options held us up and the 35 EMA held us up. So in SPY, if you did sell 566, 565 bull put spreads on either of these two times that we dropped right here, those would have closed up 100% for you. And note this down gap right here, because when taking it over to SPX, we did open down, but we didn't see a gap down like we did in SPY. And from there we dropped down, and that 35 EMA caught us. And I'm going to take this in a little bit closer. So that 35 EMA caught us, and we did get almost down to the bottom of the implied move. So if you did sell 5670, 5660 bull put spreads, then we did come back up, and those would have paid 100%. We did stay mostly above this FOMC gap. We did come into it a little bit, but this 35 EMA caught us, and we did stay within our implied move. So SPY did close down 0.48%, SPX closed down 0.19%, VIX closed down 1.10%, so market down, VIX down, and we did stay completely within the implied move, both in SPY and SPX. So like I said on Thursday night's video, definitely an easy trading day. Nothing complicated here. We dropped down to the first level and we found support and we stayed above it and we closed within the implied move. So then taking it over to QQQ, we also opened with a gap down, dropped down to the 35 EMA. We did get down to the bottom of the implied move right here, which was 478. So if you did sell 478, 477 bull put spreads, then you did have a 100% win with those. We did get caught by the bottom of the implied move and by the 35 EMA and by this FOMC gap. QQQ did close down 0.19%. VXN closed down 3.51%. And here we also stayed completely within the implied move. There was a little tiny piece of wick right here that came out, but other than that, completely traded within the implied move. And then IWM. I feel like IWM is worth going back all the way to the beginning of the week here, because IWM did open with a gap up. We did open above the 35 EMA, and we did have a bullish cross up here in IWM on Monday. Tuesday we gapped up, and this is the day before FOMC, and we stayed above that gap for the entire trading session, brought it back to the 35 EMA right here, so you could see 35 EMA plus that up gap from the start of the day held us up, and then FOMC right here, huge pop, and then we dropped, but the 35 EMA caught us again. Next day we gapped up and then traded sideways from where we gapped up, and then Friday we took it back to the 35 EMA. We did get almost down to the bottom of the implied move here. 221 was the bottom of the implied move, and we got to 221.34. So if you did sell 221, 220 bull put spreads on Friday for IWM, those would have closed up 100%, and IWM closed down 1.07%. RVX closed down 6.41%. And here we did close completely within the implied move. So 2 up gaps in IWM last week, one right before FOMC and one just after. And then DIA. We did open DIA on Friday with a gap down to the 35 EMA, and we stayed very close to that level for the entire trading session. We did pop up, we never quite got into the green. The top of the implied move on the week from the weekend before was 422, and there was definitely a bit of selling pressure right at that level. We could see it on Thursday after that gap up, and then we saw it on Friday in the way that we stayed underneath it. And we did get caught by the 35 EMA, and DIA did close down 0.2%, and here we did stay completely within the implied move on the day, and we did stay completely within the implied move on the week. All right, that was a recap of last week. See how easy this is when we cut out all the noise and just look at the chart. All right, guys, so let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. Leave me a comment below if you have any questions at all. And if you want to support my channel financially, there's a button just underneath the video that says thanks on it. And if I haven't helped you get consistently profitable yet, but you still want to support my channel, another way you can do that is to share a link to my channel. And thank you so much to everyone who has contributed so far. Alright, so starting in SPY, tomorrow's implied move is between 564 and 572, and that is from options. The 30-day average volatility is $3 wider in each direction, 561 to 575, and the implied move on Tuesday's contract is between 563 and 573. And to the upside, the first level to look for is going to be this gap right here. Now, just so you know, this gap does not appear in SPX. We did not see the same gap down. We did have a gap down in SPX, but it wasn't quite as big, and it got completely filled by the end of the day. So this does not appear in SPX, but I'm going to leave it here. If it's nothing, then we're just going to come right up to the top of the implied move. But I'm going to keep an eye on this 571 level right here as a possible level of resistance. So above that, 572, top of the implied move. 573 is the top of the implied move on Tuesday's contract, and then right at 573 as well we have all-time highs, and that's rounded up of course, but all-time highs are at 572.88. So if you think all-time highs are going to be a resistance, then that 573 strike might be a good one to sell if we do come up to that level. And then to the downside, we do have the 35 EMA right here just underneath us. Friday we did shop around it. In SPX it was a much cleaner support. I'll show that in just a second, but in SPY we did get a little bit underneath it, but it did act as a support level. Just underneath that we do have the rest of the FOMC gap that we saw the day after FOMC. That is from last Wednesday going into Thursday, right before we made all-time highs. So we did come back down on Friday and fill a part of that gap, but 565 right here is where we left off. So that is a possible support. 564 is the bottom of the implied move. 563 is the bottom of the implied move on Tuesday's contract, and down here 561 is the bottom of this gap. And also you could see that 561, we did see a little bit of support around that level last week. So pretty easy trading range going into tomorrow. And taking it over to SPX, the implied move over here for tomorrow is between 56.65 and 57.40. That is from options. The 30-day average volatility is between 56.35 and 57.70. And then the implied move on Tuesday's contract is between 56.55 and 57.50. To the upside, the first level to look for is going to be all-time highs. That's 57.33.57. You could see right here we didn't have that same down gap that we saw in SPY. We did have a little one right here, but we filled it at the end of the day before pulling back a little bit. So first level here is all-time highs, 57.33.57, and 57.40 is the top of the implied move. So if you think all-time highs is going to be a resistance tomorrow, 57.40 might be a good strike to look to if you're selling spreads. Top of the implied move on Tuesday's contract, 57.50, and that is probably the spread that I'm going to be looking to. And then underneath us we have the 35 EMA, and we did see that as support on Friday. And we also saw it as support for the entire week last week. So we opened right here, 35 EMA. Every time we touched it, it was support. The only time we closed underneath it was right here, and that was right before FOMC. If we break that, the bottom of the implied move is 56.65. And then underneath that, we have 56.55. That's the bottom of the implied move on Tuesday's contract. If we do drop tomorrow, that would be a spread that I would look to, hoping for a bounce back up. And then the bottom of the up gap right here is at 56.15. And you could see right here, we did see a little bit of support right there all of last week, and that is not in tomorrow's trading range. But if we do start trading down and you're looking maybe a little bit further in the week, then 56.15 is the bottom of that gap. And then taking it over to QQQ, the implied move over here is between 478 and 487. That is from options. The 30-day average volatility is quite a bit wider, almost twice the implied move, 474 to 490. And then the implied move on Tuesday's contract is 476 to 488. And the first level to the upside to look for is going to be right around this 485. It is where we saw resistance on Thursday. And if we zoom out a little bit, you could see that 485 has been resistance going back a few months now. We saw that as resistance in July before that big drop. Then when we came back up here, 485 again, that was in August before the next big drop. And we're at that resistance again. So 485, a little bit above that level, that's our first resistance. And then the top of the implied move is just above that, 487. 488 is the top of the implied move on Wednesday's contract. Sorry, that's on Tuesday's contract. And then just above that, we have a pretty big bear gap. That bear gap goes back to right after we made all-time highs. We did trade up, a little swing up, but then we gapped down, and that is the last bear gap underneath all-time highs. So if bears are hiding anywhere, they are definitely hiding in this gap. It is between 488 and 495. Definitely worth being aware of that gap, and don't forget that tops of gaps are typically pretty strong resistances. Tops of bear gaps, I should say, just as bottoms of bull gaps are supports. So 495, I would definitely be looking to that as a place to take profit. And then that is the upside. To the downside, we have the 35 EMA. We did bounce right on that level on Friday. If we break that, 478 is the bottom of the implied move right here. And if we take that line backwards, you could see where it was support here, and before that, resistance, 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 resistance. So this needs to hold as a support right here because it does have some history as being resistance. Underneath that, 476 is the bottom of the implied move on Tuesday's contract. Underneath that, we have 474. It's not in tomorrow's trading range, but 474 is a level that if we go back 3 months right here, you could see 474 was support, support, and then we broke under it, became resistance. We had a hard time staying above that. We broke under it, and then right here, you could see before FOMC, we consolidated around that level. Did we finally break out of that? And this is just my opinion. I think not. I see some weakness down here in Stupid Willie. We're seeing lower highs in Stupid Willie and higher highs in price. So definitely keep an eye on this bear gap right here. And then let me see what else I can see. We do have this bull gap. This is the bull gap from FOMC. We do have the bottom of the trading range tomorrow in that gap. So if we do drop tomorrow, I would expect to see some buying right here to get us back into the implied move. And then underneath all of that too, we do have the 1 hour 200 moving average. The 30-minute 200 moving average is down here, and that in itself is pretty bearish that the 1 hour is above it. So QQQ is not a clean trading range. Do not be fooled by futures being up right here. NQ is up 0.59%, but we have a lot of resistance and a lot of bearish signals here. All right, and then IWM. The implied move for IWM tomorrow is between 218 and 225, and that is from options. The 30-day average volatility is 217 to 226, and the implied move on Tuesday's contract is 218 to 226. And this looks kind of funny. We have 226 up here twice and 218 down here twice. I always round out no matter what. So this 226 right here was much closer to 225. I still rounded out to 226, and the same here with 218. This 218 was probably, yeah, much closer to 219, but so round these how you need to. And to the upside, the first level to look for is going to be the top of the implied move. It's 225. I don't think this dashed line, see, this is not a resistance anymore. So let's take that out. And then now we have the top of the implied move is the only level to the upside. Above that, we do have the highs that we just made with FOMC. They're not all-time highs, but they do match up right here. We did see a lot of resistance around this level, and that is at 225, I believe. Yep, 225. Above that, the top of the implied move is 226 for Tuesday's contract, and then underneath us, we are sitting right at the 35 EMA, and actually we're just underneath it. I didn't catch that. So the first level to the upside is going to be that 35 EMA. So as of right now, futures are above that. I try not to look at futures too much because we could be completely back down by open. So let's just assume that the 35 EMA is to the upside. So if we get above it, 225. If we see it as resistance, then start looking down the bottom of the gap from where we closed the day of FOMC to where we saw that big up gap. The bottom of that gap is at 219. 218 is the bottom of the implied move for both days, Monday and Tuesday. And then underneath all of that, we do have one more gap right here. Remember last week we made two gaps, one right before FOMC and one right after. So we do have double support here. So expect a little bit of buying right here and right here if we see those levels. And then just underneath all of that, we have the 50-day moving average, the 30-minute 200 moving average, and the 1 hour. And this looks like it's going to be pulling the price down. Either that or we might see some consolidation while those levels catch up. And then DIA. The implied move for the week here is between 415 and 426. Really easy trading range over here. We don't have a whole lot going on. We've got the 35 EMA underneath us. We do have new all-time highs right here. This is our first resistance level, and then above that it's all uncharted territory. The Dow is at all-time highs, and it made all-time highs pretty consistently every day for the past week and a half, I'd say. So that is just above 422.82, so I'm going to say 423. And then the top of the implied move for the week is 426. Then that 35 EMA underneath us, and then we have two bull gaps right here. This is from last Friday going into Monday of last week. We saw this as a support leading all the way into FOMC, and then FOMC we gapped up. So two bull gaps right here. So look to 416 as support and 415. And then the bottom of the implied move for the week is 415 and 30-minute 200 moving average underneath it. This is the most bullish setup right here. I'm not saying we can't pull back. Any point within the implied move is fair game. But as far as the moving averages, as far as the trading range itself, this is the most bullish setup. So there you have it, guys. Everything you need to know for the next 2 days to start the week off right. Have fun tomorrow, trade safe, make sure you take profits when you're up, and I'll see you guys tomorrow night.